The dynamics of this stock market are very simple. AI infrastructure stocks are soaring well ahead of the competition or their peers, however you want to look at it. The rest are being left behind. Market breadth is going nowhere. It's still in bearish territory, but the indices are being powered by the AI narrative all over again. We've seen this story before, of course. It will end, but there's no point in trying to predict that end. Who knows how far it can go, but that's where the momentum is pointing. That's the market we have, plain and simple. There's, of course, all sorts of macroeconomic, geopolitical things going on in the background, but right now, the AI infrastructure narrative is just drowning out just about everything else. Let's just go ahead and dive into those charts. I've got a lot as usual these days because we had a lot of earnings and a lot going on in the stock market. Again, if you want to just skip ahead, you can always go down to the captions below and click on and skip ahead by clicking on the timestamp. This is my favorite technical indicator, the percentage stocks trading above their 50 moving averages, what I like to call AT50 for above the 50. You can see here it is still below the overbought threshold of 70%. It fell back from that threshold. That was the bearish indicator, similar to what we saw at the beginning of the year. And market breadth dropped as low as 50, let's call it 56% on this cycle. It has churned its way higher, but has started to come back down again. It closed the week at 63.1%. It got as high as, let's just call it 67%. And I consider this sort of a mini fade from the overbought threshold. So market breadth is still very bearish according to my trading rules. That's the context in which I'm going to make commentary. Now, AT200, which is percentage stock trading above the 200-day moving average, is just kind of churning in place. It's not confirming the bullishness in the market, but it's also not confirming the bearishness anymore of the short-term market breadth. All right, so remember, this is the context that we're dealing with when we talk about the indices, okay? So despite the bearishness in market breadth, you can see here, S&P 500, it really hasn't been bothered that much. Let me move the all-time high here. It has hit multiple all-time highs for several weeks now, not bothered by the bearish market breadth. And this is why I'm not bearish on the market, because the indices are moving so strongly and so well. Okay, and now you can see it's starting to get a little overstretched, but not quite. It's hitting the upper Bollinger Band, which is that black line there. It defines about 95% of the trading action. The NASDAQ, similar thing. It's just been powering higher, all-time highs for several weeks now, and it actually is getting a little extended above the upper Bollinger Band. But just remember that in this breakout period, look at that. The NASDAQ was able to punch above its upper Bollinger Band several times and just continue motoring along. You can't get more bullish in terms of just pure price action on the indices. Now, what's a drag? Well, IWM, this is the ETF of small caps. It did hit an all-time high this last week, but it pulled back sharply, 1.6% on Thursday, and so now it's lagging the other indices, and it's helping to drag down market breadth. And I did my usual trade on IWM. I actually also bought back into some shares on that dip. I'm going to try to rebuild a position in IWM. All right, let's dive into the star of the week. VanEck Semiconductor ETF, ticker symbol SMH, closed at another all-time high. I mean, the chart just says everything, right? I mean, it speaks for itself. It's just been going straight up since the breakout, the beginning of April. Almost no rest, right? Just no dip to buy. You have to basically just dive into the deep end of the pool on this one. And this has semiconductor stocks are part of the AI infrastructure stocks that have been really the stars of the show, helping to motor the stock market up. For instance, we have SanDisk Corporation, ticker symbol SNDK. You can see how it has had its own relentless drive higher. Just this last week, right? It went up 16.6% on Friday, and it started the week Monday, going up 5.8%, and then 12% on Tuesday. I mean, and this is a stock that reported earnings in the last week, and the momentum has just been amazing because it's been confirmed by other stocks. I went to a weekly chart just so you can see just how strong SanDisk has been, right? Since last summer, it was down, let's just call it $45, and now it is $1,562. Just this past week, it increased 31.6%. I would like to call this a mania, but the capacity is very constrained. There is a scramble for supply, whether it's double, triple, quadruple ordering, who knows? But there is definitely a mad scramble for AI infrastructure related stocks. In fact, while I'm showing SanDisk, let's just go ahead and take a quick look at AMD. They did report earnings this week, surged 18.6%. And now today, another 11.4%. So AMD is now in the RIP territory. And in fact, if I remember correctly, AMD is now hit one of its, I think it's hit its first milestone in terms of what will trigger OpenAI to sell some of their AMD stock. I'll have to go back to the post I wrote about this, but I'm pretty sure the first trigger was around $450. And at the time of the OpenAI deal, that $450 sounded like it was going to be far, far away. I mean, here it is right here. This deal with OpenAI was way back in October of 2025, and AMD was trading around $213, right? So AMD and OpenAI at that time were betting on a double. And you could see that AMD just went into this long period of going nowhere before finally the market caught on and sent it sky high. This is kind of infrastructure. I'm going to call this infrastructure because Akamai, ticker symbol AKAM, made a $1.8 billion computing deal with Anthropic, along with announcing earnings. So those two combined sent Akamai up 26.6%. Massive move. And you would never guess that the stock was being set up to surge like that because it really struggled in early April. Huge plunge. I think this was actually ironically Anthropic related from Claude. In terms of another one of its software platforms. I'm just peeling back to make sure. Yeah, I think this is an all-time high for Akamai. Let's just totally make sure. Go to the monthly view. No, not quite an all-time high. Still has a little ways to go. It's got to more than double to get to an all-time high, but still, this is higher than it's been since the dot-com days. That's pretty impressive for Akamai, and I just regret getting shaken out of this stock a while back. Now, on the infrastructure, similar peer company in the CDN space. This is a content delivery network. Fastly, ticker symbol FSLY, has also been on a tear, but its earnings were not treated well. Dropped 38.2%. It's in bearish territory below its 50-day moving average, and it's actually below this last dip. So this is a stock that's kind of in trouble, back to levels of last traded in February, and now it's in line to test the 200-day moving average, which is this blue line. And then finally, another sort of internet software infrastructure stock, not really quite AI, but still a peer. I think of it like a peer with stocks like Fastly and Akamai. This is Datadog, ticker symbol DDOG. It soared it soared 31% post earnings. This is a stock I really like, and let me just show you here. This breakout is typically exactly the kind of breakout I would buy. This is a nice bullish breakout above the 200-day moving average, but I saw earnings coming up and I froze. There was no way I was going to buy ahead of earnings. So that's just the luck of the draw there. Strangely enough, despite that huge surge, Datadog is still just now testing the highs it hit in late 2025. So it is above where it was when it was included in the S&P 500. So I think Datadog's looking good. It's definitely buy the dips from here. I'm not going to chase it. It's well above the upper Bollinger Band, so it's extremely extended. But you can see the bullishness, right? It's still gained 6.1% for a new high for the week, despite that massive 31% post-earnings move. Absolutely amazing. Very, very bullish. IGV, ticker symbol IGV. This is iShares Expanded Tech Software Sector ETF. There's a lot of big news. IGV, you can see the buyers are now jumping into IGV on dips, whether it's intraday or daily. The 50-day moving average, this red line, held perfectly as support twice. We now have higher lows and higher highs. This is an ETF that's been beaten up so much, just to remind you how far it's come down from about 118 and it's now at 91. But it is now starting that classic bearish to bullish reversal, higher lows and higher highs. And as hopefully you know, if you've been following my blog or this video, I am a huge contrarian on the software space, and I've written an entire analytic model to identify buys. So this was actually a great week, and I talked about it on my blog for Atlassian, ticker symbol TEAM. A stock that I've been long bullish on is JFrog, ticker symbol FROG, had a massive 23.7% post earnings gain. It is now buy on the dips. This was one where this is another Anthropic news. Sorry, I didn't label it, but this was when Frog got caught up in Anthropic releasing one of its Claude models that people thought would just, completely eliminate the need for any kind of software. And Frog somehow got caught up in it, sold off 24.9%. Now, I sold a put, but selling that put was certainly not aggressive enough to take advantage of that total panic in the stock. And now you can see this total seesaw pattern, right? Huge down. In fact, it sold off again the next day. It had me concerned. Sold off another 8%, got as low as $35, and now it's doubled from those lows. So that's what I mean by I was not nearly aggressive enough in being contrary on this one. So now all I can do is wait for Frog to dip before getting in. Another one I talked about on a short is Palo Alto Networks, ticker symbol PANW. Cybersecurity was in the spotlight this week. I won't go through it all again, but I set my buy target. I wrote about Palo Alto Network. It was a proof point for my analytical model on being contrarian in software stocks. Somehow cybersecurity was sold off when Anthropic came out with another one of its models, Mythos, Project Glasswing. But you can see now Palo Alto Network is as bullish as it can be. Nice breakout. I didn't buy the breakout because I already had plenty of Palo Alto Network that I loaded into back during this past panic. And you can see it finally cleared that 172 level that I pointed out. Now today's 5.8% surge has got the stock well overextended, but I'm not selling here. I mean, I expect Palo Alto Network to eventually break out and resume this uptrend that's been dominating the stock for so many years. Also, similarly, in a peer stock, Cloudflare network, ticker symbol NET, I guess I could have shown this along with Akamai and FSLY and whatnot. It plunged 23.6%. And unfortunately for employees of this company, Cloudflare had a massive layoff. I shouldn't say blame, they celebrated their ability to replace at least some good number of those people with AI. I'm still of the mindset that companies that are publicizing and actively replacing large numbers of employees with AI are to be looked at with a large amount of scrutiny. Because I think what we will see over time is that AI is going to be an augmenter of businesses and will lead to growth, not just cut costs. So anyway, that's just my opinion. That's the narrative that I've been running with. But you can see the impact on Cloudflare. It dropped below its moving averages. So it is in trouble. But overall, you can see it's been in this long trading range since last summer, 2025. So if you have a longer time frame, you could say, well, it's just more of the same, right? And that's, of course, fine to conclude that. Now, here's the stock, ticker symbol CDW Corporation. It's been bearish for a long time. They're IT. They sell software and hardware, I believe, as part of their IT solutions, information technology solutions. It peaked back in 2024 and has been choppy down the way. And I just have never seen a low risk way to get short, but this stock just keeps churning its way down. Massive disappointment on earnings, down 20%. And this I guess the results were so bad that the sellers followed up with another 4.9% drop. So hopefully you're starting to see that there is some serious dichotomy and divergence in the stock market between the winners and the losers right now. Yelp. So now let's leave technology for a while because I want to talk about the consumer or consumer facing stocks. Yelp, ticker symbol YELP, was right on the verge of a nice breakout at the 200-day moving average. Couldn't quite break out of there. And actually, let me just point it out for you here. This is the bang, 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 couldn't break out. And now earnings, it fell 5%. But it was worse. It broke down below the 50-day moving average, which is that red line, and rebounded back. So I actually have this on my buy list. If it can close this post-earnings loss and then get a close above 200-day moving average, I'm going to consider Yelp to be in the middle of a big, big turn and recovery. Now, recent IPO, Toast Incorporated, TOST, they make some of those little panels that go in restaurants for paying your bill and whatnot. It has also just kind of been going nowhere since actually the summer of 2024, and it fell 14.7%. So another bad sign in consumer-facing stocks, particularly those dependent upon discretionary spending, like in restaurants. Speaking of spending in restaurants, excuse me, Shake Shack, ticker symbol SHAK, tumbled big time, 28% post earnings. It was looking good ahead of earnings because it broke out above the 200-day moving average, held that as support, and and held the 50-day moving average as support, but now it's all gone to waste. Shake Shack was in this long, you could see this big trading range here, and actually I should let me just start drawing in these lines so you can see what I'm talking about. So here was the approximate top of that trading range, and then you can see the approximate bottom of that trading range right around here, and that'll help you see that Shake Shack has now broken down below that line. So Shake Shack is very bearish, and I suspect bears will look to short a rebound back to this level. Let's just call it around $75. And actually, I'm going to be looking for it at $75. Now, Shopify, ticker symbol SHOP. I've been wanting to be bullish on this, but this stock just can't get out of its own way. It fell 15.6% post earnings. You can see it's been chopping around under the 200-day moving average resistance. So it has been bearish for most of this year. After it broke down below, in January, it just hasn't recovered. And I have to basically give up on any kind of bullish interpretation of what's going on with Shopify for now. DoorDash, ticker symbol DASH, fooled me. I thought it was on the middle of a rebound. Yes, it faded post earnings and only ended up with 2% gain. And let me just make that clear where I'm talking about. This is the earnings move right there. But then today it gave up the rest of those gains, dropped 4.3%, and now is at a new low for this cycle and is below the 50-day moving average. So now I'm a little worried that it's poised to eventually break down again. It still has a ways to go, of course. That's about 145, but I'm on alert. I bought a small number of shares, but I will stop out if it makes a new low for the year. Just part of my trading rules. All right, so now you can see that on the consumer-facing sector, a lot of these discretionary stocks are getting left behind, not enjoying the excitement that everybody has for AI infrastructure stocks. Financials, also a worry. This is State Street Financial Select Sector Spider ETF, ticker symbol XLF. It is totally a laggard, completely lagging. You wouldn't even know that there's a bull market, a raging bull market in the indices if you looked at financials. XLF has been stuck below its 200-day moving average as resistance. It tried to break out April 21st, couldn't do it, faded back, and it's been churning ever since. And now, with the losses that it suffered this week, it looks ready to test the 50-day moving average. So that has me very worried. Again, it's kind of in the background for now, but this is part of what's holding back some of the market breadth, the weakness that's been creating the weakness in the market breadth. Now, remember what I said about companies that are celebrating AI as a way to get rid of employees? Well, this is Block, ticker symbol XYZ. I was wrong on this. I bought some puts that were good when it broke down below the 50-day moving average, and then they weren't so good after it recovered. And now, after earnings, Block is up gained 6.7%. it's confirmed its 200-day moving average support. It's broken out. So, I have to concede that block is bullish, even though it's still in the middle of a massive trading range dating all the way back to 2002. In fact, let me again just draw this line so it's clear. There's the top part of the range approximately. And here is the approximate bottom part of the range. So you see it's a very wide range between, let's just say, 41 and about 100. So yes, it's still going nowhere, but for the short-term traders or swing traders, it is definitely a bullish setup. And I have to concede defeat and that I was wrong on that one. But I still have it on my radar because I think there will be a time of reckoning. It's just not now. All right, what I got to celebrate this week was, and I wrote about this stock, I think last year. This is cross-country healthcare, ticker symbol CCRN. They do nurse staffing, medical healthcare staffing. I wrote about this. I won't go into the long story here. There's a lot of back and forth, but I was so stubborn on this stock. When it fell back here in December 2025, 20% post earnings, I loaded up on more stock. And thank goodness I did, because it brought my basis down. And now I was able to profit very well, very nicely from another company. And sorry, the name is escaping me right now. Bought out CCRN for about, I think, 13, 12 in cash. And the stock jumped 29.5%. Now, of course, I took my profits because, just as a refresher, the stock was actually was supposed to be bought out way back in December 2024. There was an offer made, and that deal failed. In fact, the market seemed to sniff it out a few months later, and the stock just continued to drop. And I was betting on the deal actually coming through. So it is kind of gratifying that I stuck to this narrative, even though I had to buy more shares at a very low price and just take that risk. All right, finally, if you remember, shipping stocks, logistics stocks were hammered by some previously unknown AI company that used to be a karaoke machine company. Well, this is one of the stocks that suffered. This is Expeditors International of Washington, ticker symbol EXPD. It dropped on that news that this company was going to disrupt all of shipping and all of logistics worldwide with their AI platform. It dropped 13.2%, but you can see it did get lower once. This is on earnings. It dropped 7.2%, but then guess what? You fast forward here, we got shook out. The stock shook out more sellers when Amazon announced supply chain services. This actually caused sell-off across the sector, trucking and transportation. Shipping and logistics. Sorry, I'll get that out right. But that shook out just enough sellers so that when the company reported earnings the very next day, jumped 9.6%. Whatever was worrying people back here in the earnings in February is now in the rearview mirror. The stock has recovered all those losses. It's in bullish form. And if I scroll back here, you can see that the stock recently broke out last year. And I expect this move to continue now that a lot of motivated sellers have been shaken out, and apparently the last earnings was interpreted positively. All right, thanks for hanging in there. Again, share and like this content so the algorithm knows what's up. Subscribe if you want more content like this. And as always, put any comments, feedback down below. I'll be happy to answer your questions and take your feedback into consideration. All right, thanks. This has been Dr. Duru with the Market Breadth from Ahan Analytics, and I will see you the next time.